Hey there, Alisado with Simple Option Strategies. Today I'm going to be talking about my 2021 trading account performance. I'll be walking you through 4 of my strategies, 3 of which are SPX credit spreads consisting of daily options or 0 DTE. DTE stands for Days To Expiration. Monthly options, which are 30 to 45 days to expiration, and weekly options, which are 7 DTE. My 4th strategy is Micromini Futures on the NASDAQ and S&P 500. Towards the end of the session, I'll bring it all together and discuss how we derive the real rate of return, which is very different from what you may think. So please stick around for that because I'm sure you're going to learn something that you can use. And be sure to subscribe and like my video. All right. So with that, let's get going. Okay, I'm going to start with 0 DTE. 0 DTE is a trade that expires on the same day that you put it on. It's a day trade. You can see here that the performance is pretty dismal. The good news is that towards the end of the year, I started getting a lot better and really focusing on these trades. And so hopefully this year for 2022, it's going to be much, much better. So what I wanted to explain as well is that, see the $1,500 here is basically the amount of margin that I put on to segment this trade from the rest of the trades in the account. Okay, so I used $1,500 worth of margin for the most part to put on these trades. And so towards the end of the year, I started adding additional margin, probably around 3,000 or 4,500. Once the performance started getting a lot better, I started adding additional contracts. And so right now I trade 15 wide spreads. In any case, the rate of return here for this trade is negative 300%. And so, yeah, I took losses here. That's part of trading, but my goal is to really improve on this strategy. All right, let's move on here. So let's go on to monthlies. Monthlies, I set aside $30,000 and I trade 15 contracts per month. And so I started with 30,000. I ended up with 43,000. So that's a return of about 46 or 47%. Not bad. And if you look at it, I had 2 negative months and the rest were positive. And this is like a sleeper trade. It's a really nice trade if you have a career. You don't really have to manage it much. Just set it and pretty much forget it, monitor it. And it works really, really well. If you see my videos on managing these trades, then you'll see how pretty straightforward it is. Okay, so great return on this. Hardly have to do anything. It's not a lot of work. And, I was able to beat the S&P 500 on this one. So this trade is probably the most popular trade that I do. So here I had a $40,000 account. And what I do is I trade in 3 different expirations. So I spread out the risk. And basically ended with 71,000, which is a close to a 78% return on this. And it's really a fabulous trade. And you can see here that I was able to have just 1 negative month, which was May. And the rest of the time, it's just really strong performer. By the way, I put together a really slick PDF that explains my 3 most popular SPX trades in detail. Get the trade plan for free by clicking on the link in the description. Okay, now I'm going into Micromini Futures. And so these are the futures for S&P 500 and the NASDAQ. And you can see here that I started with around $6,000 and I ended the year with $23,000. So this was a big, big gainer, right? Almost threefold, almost 300%. Got 262% return with these Micromini Futures. Towards the end of the year here, I was kind of really leveraging up on this once I started performing really well. And what I would do is just add contracts and then close them out at the end of the day. And that really pushed that up. And I'm looking to make that performance really, really high next year. So we'll see. We'll see how that goes. So I'm going to cover now the real rate of returns. This is my actual TD account. And you just look at the start and then the end, you can see that it was overall, it was a 75% return. Now, keep in mind that I trade monthlies, 7 DTE, 0 DTE in here. I don't trade futures. I use Trade for futures. So this is my TD account. My second account is my E-Trade account, which I added. I negotiated a deal with them to get 35-cent commissions on these. And so I opened an account. You can see here that I pulled out 20,000 from this account, and then I added another 10,000 to open that account. And then towards the end of the year, I put back $10,000 on my TD. And so starting in August with $30,000, the return on that was 19%, which was just pretty good. The other account is the Trade account, and this is the one that's just straightforward. no inflows or outflows. Basically, I used the money that was in there to make those gains. You can see here was 261% that we just talked about. Okay, so overall, if you add all of them together, kind of in a simple way, you'll get 151.7%. I mean, it looks right? But I can tell you that that's not really the way that you're supposed to compute this. And so what I wanted to show you is the formula for money weighted rate of return. And this is how the pros use their performance against the S&P 500. Here's the formula. So the money weighted rate of return equals cash flow 0 plus cash flow 1 plus IRR, which stands for interest rate of return. And this is really a finance formula. So I called my brother-in-law, who's a real finance and technology guru, and he didn't really get it either. But in any case, I found out that the formula is actually in Microsoft. It's in Excel and in Google Sheets. And the formula is XIRR. So what you do is it groups together the dates that you add or subtract, or basically add funds or subtract funds, which are inflows and outflows. And then it groups together the actual amounts that you have for inflows and outflows. And you start with your starting balance. The formula is computed. So you can see here for my TD account, basically made 81%. And on the money weighted rate of return for my overall account, summed up the amounts and I added the cash flows in there and ended up with 95. Definitely not the 100 and some percent that I had, but still pretty darn good rate of return. I was happy with it. So now you know how to compute for your real rate of return for an account, and that way you can benchmark it against the S&P 500. All right, that's all I have. Hopefully this was of value to you. Make sure you hit the subscribe and like button, and I'll see you on the next run. Thanks.